The market got smoked at the end of the day Friday. The reason the market got hit really hard is there was 48 option orders that came in worth $4.1 million in premium of Intel. This trade, not only do I like it for the reasons that I mentioned, for the Qs and for the huge unusual option activity, but it also just makes a lot of sense right now. I put this that I was going to discuss levels in class, which I shared in Discord just a little bit ago, and we're going to tranche into that on this call. But I wanted to do that because of the short-term options. Short-term options have an immense amount of gamma, so the levels are going to change so fast. So I don't want to put price in there, and that just becomes very unrealistic. So let's go through the charts that I did add. I added on Cheddar Flow 4.3 million in options that traded on Friday. Intel is the purple, and Intel and the NASDAQ are very correlated. This is Intel and the NASDAQ going back a full year. You know, they're not going to move in lockstep, right? They're QQQ is all the tech companies, and Intel's one tech company, but like we talk about, everything's really got a beta of one when you really look under the curtain, right? NASDAQ's going to get hit, Intel's going to get hit. Over time, they'll move a little bit differently, but what ended up happening is Thursday, look at the Friday, Intel got smoked. And that, I think, was the real catalyst that dragged the entire NASDAQ down after seeing that huge order. If we look at the high value target tool, this is on a daily. High value target tool plays Intel like a musical instrument, just going back and forth, back and forth. And right now it's at the high side. We're going to get a sell signal as well. Intel buying 37.5s. Now we can get a little bit better levels. We can get better levels because the Qs rallied or are trying to rally to the upper end of that band. Okay. So the 4 here, right? We talked 37.5s. Okay. You can go here, or if you want, you could tranche in on the 38s. I would go right now, whatever you have, as kind of like if you first started to tranche in this morning, you can just do the rest there. And if you're willing to risk $1,000, you know, buying 37.5 for 38 cents for 4 days is a good do. That's for this week. But I also like longer term trades going out to November, let's say, going out to November, and we got them here, 35s for $1.02. Now you can get them for 97 cents. So I'll just keep that there for $1.02, but really right now, 35s, 97 cents. This gives you kind of like that QQQ exposure. If you're long like a shit ton of things in your IRA and your futures account doesn't have a lot, and your options account doesn't have a lot in it, this is a kind of a no-brainer trade for you, because if the market does get really hit, the long-term portfolio is going to get hit. Hopefully the money that you make on these options would, you know, balance some of that risk off for you. Common sense trading tells me that if I put on 5 years and if I look at the NASDAQ, the Qs, when I talk about something being like artificial, what I mean is slow and steady wins the race. Once in a while we get over our skis, we come back. We get over our skis, we come back. Ooh, wow, we really come back. All right, now it's just money comes into the system. It's artificial. Boom, boom. We're going to rally to. It seems that coming down is pretty sensible. This is a weekly chart, so let's remember this is all going into the end of the year. So make sure that you have some downside protection. We talk about it all the time.
No, I like this trade, and it just seems like we're on the edge of something here. So, but you know, it's always say, in my opinion, $10 gets you a Starbucks coffee. So, but it just seems like we're on the edge here of something. So I agree with you. I like this trade.